Alrighty, so we're going to just briefly go over why the market sentiment was skewed to the downside today, why we saw cryptos, particularly like XRP, which has been our primary focus, Canton, primarily because I day trade XRP, so I pay very close attention to these levels. We're going to take a look at the total cryptocurrency market cap, explain why the market shed $155 billion today, and then I will go over my M and Q positions today. I had some really nice scalps on my funded accounts, buys to sells to buys, and then just recently while we were on the call with Jerome Powell, took two more short positions down into the dark pool. I want to show you guys first how just accurate these dark pools are and why they're so important to just be mindful of and pay attention to. So even if you guys don't trade crypto, right? Michael had pointed out this rising, which by the way, congratulations for anybody that doesn't know, Kelvin as of recent. We had Michael recently. We also had Duality, all past challenges in this community this week alone. Well, Kelvin passed last week, but three people passed challenges this week alone and have become funded traders. So really great to see you guys thriving in your trading and investing careers in this community. But gold was very interesting. Michael had pointed this out. So I went ahead and I highlighted it just to show you guys the level of accuracy that we trade with in this community. This yellow circle here was when Scalper in the gold analysis section had mentioned to you all some dark pools to be mindful of on gold. Okay, so if we come over here to the CYPRX Discord and we come up and we go to the XAU USD analysis section and we go back to gold on the 12th. And you can see this dark pool here at the 48460. And gold was trading above $5,000 per ounce then. And so the reason why they're so important is because you know how many retail traders are out there trying to buy gold, thinking that they're going to FOMO and like miss some opportunity. But instead, we have these levels that give us areas where, buy liquidity is resting in the market to be patient and wait for these levels to materialize before we enter in as participants. So that way we can get in with the institutional momentum. Now, fast forward to today. Look at how freaking accurate this is to the pip. This is when Scalper sent that message out. Gold traded straight down into the institutional dark pool at the 4846. So we had this level, what's today? 6 days in advance. Now, XRP, of course, we've been covering as well. I've been trying to show the general public how accurate our analysis is. I delivered this screenshot to give everybody an update on the dark pools and the levels to be mindful of. XRP was trading at $1.53. I'd highlighted $1.43802 as the next area of interest to the downside and mentioned core PPI, FOMC, unemployment claims, and all this data was still set to come out this week. If we come over and we take a look at XRP, it's not just commodities, it's not just futures, it's also crypto. XRP traded down straight into $1.43802. I took a nice buy scalp on BidFi, made a quick $1,000 flip on XRP today outside of my futures accounts. And it was literally just off of this play, waiting for price to come down into a dark pool and buying as soon as it came down into the dark pool on the lower time frames, seeing a nice little delta held pattern, right? So you can see price comes into the dark pool. We see a buy delta held pattern, even though it's probably still going to go a little bit more to the downside because of the market sentiment. I was buying off of this alone. So we see price come into the level, liquidate a low, shift structure. As soon as I saw that, here's your one, here's your two. I waited for the pullback, entered in on the pullback, and then rode this nice little wave to the upside, right? So that was a beautiful move just to, again, day trade XRP and make some money while the market's in a downturn by utilizing the dark pools that we give in advance in this community. So outside of that, today, why did the market sell off? Today's market sell-off wasn't random. It was a direct reaction to multiple major catalysts hitting at once and forcing a shift in expectations. At the time of writing, the total cryptocurrency market cap lost over $135 billion, with about $70 billion. This was when I wrote this. It's down now about 84, wiped out in just a single day. Equities also moved lower. The dollar strengthened and volatility picked up. When you step back, it all comes down to one core theme. Inflation is still not cooling as fast as expected, and the Fed is not ready to cut. The first trigger came from the latest US PPI reports, which came in much hotter than expected. Producer prices rose 0.7% month over month, more than double forecast, and hit 3.4% year over year highs, which is the highest in over a year. Core PPI also jumped to 3.9%. This matters because it shows inflation is still elevated, and more importantly, this data was collected before the full impact of the Iran conflict on energy prices. So markets immediately started pricing in the idea that inflation could actually move higher from here. At the same time, geopolitical tensions escalated. We had strikes on the Iranian energy infrastructure, and growing risks around the Strait of Hormuz push oil above $100 per barrel yet again. Higher energy prices don't just stay in oil, they spread through the entire economy, raising transportation production and consumer costs. So now the market is dealing with a dangerous combination. Inflation already running hot, with new pressure from rising energy prices. And then we had Jerome Powell speak today. His comments confirmed this shift. He made it clear that there's been a movement among the Fed members towards fewer cuts, and that progress on inflation has been slower than expected. He also emphasized that rate cuts are conditional. If inflation doesn't improve, they won't cut. And we're not seeing the inflation improve. And we're also, obviously, of course, seeing oil prices spike, which could possibly trigger higher and elevated inflation, later reports. On top of that, he acknowledged uncertainty, which was his favorite word today. And we know that markets do not react positively when Jerome Powell throws that word around the economic impact of the Middle East conflict, especially when it comes to energy-driven inflation. So, in simple terms, the Fed is not confident enough to ease policy anytime soon. This is where expectations change. Markets were previously pricing in rate cuts in the middle of this year, but after today, those expectations got pushed further out, with some projections suggesting cuts may not come until much later in September or October, or even not at all this year if inflation remains elevated. And when rates stay higher for longer, we know that liquidity conditions stay tight. That puts pressure on risk sentiment and assets like crypto and equities, while supporting safe haven plays like the dollar. What made today particularly heavy is that everything aligned in the same direction: hot inflation, rising oil prices, and a more hawkish oriented Federal Reserve. And then, obviously, of course, the Iran tensions creating market uncertainty on future inflationary prospects. Overall, this created a classic risk off backdrop. The key takeaway today was not just that the market sold off, it was a repricing. The market is adjusting from a narrative of falling inflation and rate cuts to one of persistent inflation and geopolitical pressure, and the Fed that's staying cautious, as Jerome Powell mentioned also multiple times throughout his commentary and rhetoric today. So that in a nutshell is why we saw a risk off backdrop today. Now, just taking a look at first off the total cryptocurrency market cap, what I do want to highlight is that on the higher time frame, we are still above the institutional dark pool. Let's go out real quick. So we are above right now, currently, let's say, actually, as a matter of fact, I think we're actually coming into this week's low. So we actually just traded into this week's low at $2.4 trillion today. The question remains now, do we see price hold this previous resistance, acting as a support, pushing price higher, now broken, turn into a resistance, and prices trend lower, opening the door for a possible revisitation of our institutional dark pool at $2.3 trillion? Or do we see the current, let me zoom in, or do we see the current moving average act as a support, last week's low and higher low act as a area of interest where buyers might try and attempt to defend? And do we see prices recover from where we're currently sitting? Right? This is the question right now that remains. So if we do see scenario one, which is markets continue with their downturn, risk off sentiment, then it's likely that we're going to see a revisitation of lower prices and a possible revisit of the $2.3 trillion dark pool. In this scenario, I will also be looking at some shorts to take XRP's price back down into possibly $1.34, which we'll go over here in just a second. If if $2.3 trillion and that threshold breaks and we see it start to act as a resistance, having previously acted as a support, sellers overpower buyers that try to make an attempt to defend, it starts to act as a resistance, and we start to see lower lows and lower highs underneath of it. That is going to open the door for a much deeper retracement down into 2.05 trillion, which is still on the table given the current environment. And if $2.05 trillion breaks, which will be the last defense for buyers, then that's likely going to open the door for a much deeper fall down into the $1.84 trillion level, which is our next area to the downside. But we will take it level by level. So for now, price is still holding above last week's low, which comes in at 2.4 trillion, and we're currently trading at 2.42. To the upside, if last week's low holds or the $2.3 trillion threshold holds as a support and a defense for buyers to trap sellers and push price higher, again, I'm not getting too excited until we see a move that surpasses $2.6 trillion and engulfs all of these previous sellers, which are clearly passively defending these highs at around $2.6 trillion. If we can see a break above 2.6 trillion, turn it into support, then that would open the door for a deeper retracement into 2.89. Far stretch away from where we're currently trading at today, given the market sentiment. We would clearly need to see the sentiment improve. Right now, considering the data, tomorrow we do have unemployment claims and we have some more data on Friday. Actually, no, excuse me, we don't have any data on Friday. We have just employment claims tomorrow. That would mean that we would need some type of like miracle announcements in the Iran tensions, if you ask me, or some type of the market pricing in, de-escalation or no more escalation in the Iran tensions and possibly see some profit taking in oil and profit taking in dollar, right? To see a scenario like this. So we'll definitely be headline focused outside of the unemployment claims tomorrow. Keep in mind as well, we definitely have volatile days ahead with the Bank of Japan's monetary policy decision, any announcements from Governor Ueda as well, considering that there's been some fear, uncertainty, and doubt about a possible yen intervention. Keep that in mind. As of right now, the dollar is strong, trading at the 100.084. And Japanese finance ministers have mentioned that if the dollar gets too strong against the yen, they could possibly step in and intervene with the currency, which is also a catalyst in the coming days ahead that we still need to keep on the back burner. Okay. As for XRP, real quick, just taking a quick look at some levels that we are still paying very close attention to. Literally, I'm not saying this to be cocky or to be arrogant, but we are the most accurate technical analysis community on the face of the internet. We take these things level by level. I mentioned to everybody in previous video breakdowns not to get too excited of any higher prices on XRP if we cannot overcome the dark pool at $1.62. You can see clear as day, there was a passive seller sitting at around $1.62 here in this area where the seller clearly defended this area before, and they have now defended this area a third time. This is a very key important area that we need to see broken before we get excited of any higher prices on XRP. Turned into support, sellers trapped at these areas, and buyers becoming aggressive above it. Until we see that, downside is warranted. With that being said, we have come back into the first sell wall that we previously broke on the order flow. Same thing like $1.62. You can see $1.43 played a very big role once this seller aggressively broke the support here. And then every single time buyers came back up into $1.43 for weeks, it acted as a resistance, and passive sellers, whoever was sitting here as a passive seller, constantly trapped buyers. 1, 2, 3, 4, 5, 6 times up until the middle of March, where it was finally broken by this aggressive buyer. Buyers then trapped sellers, put up a passive defense, and pushed price higher, becoming aggressive, pretty much demolishing the seller that existed at this level. Now this is currently acting as a support as of time of recording. So the question, just like the total cryptocurrency market cap, is can we see buyers defend in this area? Can we see a reaccumulation of buy orders? See price hold above the triple moving average and turn $1.43 into support? Break back above $1.49, which is now the most recent previous support, acting as a resistance? Then that would open the door for a case and a meaningful recovery back into $1.62 for buyers to make another attempt. If this does not play out, the last bullish scenario that I would be mindful of is if we did see a deeper retracement down into $1.43, where we can clearly see we are still operating in this bullish environment for now. So we could still see a deeper move down into $1.43 for buyers to accumulate there. hopefully trapping sellers becoming aggressive enough to break back $1.43, break $1.49, turn those two levels into support, then that could open the door for a meaningful move back into 162 for buyers to make another attempt. These would be my two bullish scenarios for XRP for now. If we do, in some bullish environment, break above $1.62, just so you guys see the levels that I'm being mindful of next, anything above $1.62 would likely open the door for a full-on recovery of this previous downside move here. And that could push us as high as $1.77 to $1.98. I'm just keeping those on my radar in case bulls come back into control. To the downside, especially considering the current market environment, if sentiment worsens from where we're currently at today, we see a break below $1.43, previous support now acting as a resistance. We also see the triple moving average start to act as a resistance and price trade below 143. That's going to immediately open the door for a revisitation of $1.34. I will most definitely be looking for some sell scalps if we see this materialize. However, right now I am still sitting in some buy positions after having shaved some profit off the table. My stop loss on BidFi is at break even at $1.43802. So I will probably hold that trade. I took $1,000 off the table. There's still 500 running. If we can come up into 149, I'll probably close the trade in full. And if not, I'll get tapped out in profit, and then I'll start to look for sell positions down into 143. Sorry, excuse me, 134. Underneath of 134, the last buy wall on the daily right now sits at $1.27. Excuse me, I'm incorrect on that. There are two buy walls, one that sits at $1.27 and one that sits at $1.11 all the way down here at this wick. So if $1.34 breaks, that's going to open the door for a deeper retracement down into 127. I'll stop right there. I'm sure that we'll have another Zoom call before that comes into fruition, just in case. Anything under 127 could open the door for $1.18 to $1.11 as the last support or defense for buyers to step back in before sellers completely gain the upper hand and push price much lower than $1. But for now, those are our immediate three downside targets: 134, 127, and 118. To the upside, we need to see support at 143. We need to see an engulfment at 149, and that could open the door for buyers to try to make another attempt to break above the seller at 162. All right. Canton. Man, Canton is probably one of the most boring pairs right now to freaking monitor because after we broke out of this huge ass consolidation, we traded down into the dark pool, and then now we've just been trading around the dark pool for literally pretty much all of March. Yeah. The entire month of March so far, we've just been trading at the 14,801. So same analysis. Okay, we haven't changed our levels. You can see that we just most recently made an attempt at that 15.5 cent range that we had highlighted in the previous Zoom call, where we can clearly see there was a seller here that trapped these buyers and pushed price down into the dark pool. Same thing, buyers made another attempt to break 15.5 cents here. Sellers prevailed, pushed price back into the dark pool. Buyers defended the dark pool again, made another attempt at 15.5 cents. So you can see now this is a very important price level that we need to see price break above, turn into support before we expect any higher prices. So, bullish scenario first on Canton. If we can see buyers defend at these lows, break above 15.5 cents, turn that into support, then that would open the door for our next target at roughly around 16.5 cents. If we can turn 16.5 cents into a support, that would open the door for a retracement up into the 18,194, where buyers could make an attempt at the seller's stop losses at these highs. If we see a sell squeeze and we do end up seeing buyers push through 18,194, 19,214 is our next bullish target. If at any point in time we can see that materialize again to the upside, 22 to 26 cents are our next upside targets for possible profit taking. Far stretch away from that. So again, our most immediate upside targets are 15.5 cents and 16.5 cents for now. I'm not getting too excited until we see price above those two levels. To the downside, which is personally what I favor because I would like to buy much more Canton. If we can see 14.5 cents start to act as a resistance, as we're clearly seeing that 15.5 cents act as a resistance right now, buyers are unable to make any meaningful recovery or attempt above that level. If we start to break this base and we start to see lower lows and lower highs underneath the 14,801 dark pool, that's going to open the door for a deeper retracement down into the 12,275, which we have been waiting for some time now. That's going to be my next most immediate area of interest. I don't really think Canton's going to go any lower than that unless we see some type of aggression and substantiating move or risk and sentiment, like unwinding of the yen carry trade. I feel like would be something that could take Canton down to those levels. You know, who knows? But the fact that it just keeps consolidating at these dark pools clearly shows that buyers are defending at these levels for now. So 12,257, 12,275 is the next bearish target. We clearly have these ones on our radar to the downside, but for now, 12,275 stands. Outside of that, though, in terms of crypto, that is really all that I have. I just wanted to give you guys a brief update on the market sentiment.